The cryptocurrency realm is mounting a resilient resistance against impending regulatory proposals seeking to broaden the scope of entities obliged to disclose specific digital currency transactions. In August, the draft of the proposed guidelines is posted by the U.S. Treasury Department with the aim of mitigating challenges associated with the reporting and taxation of cryptocurrency transactions, and as well as a simulated market as they critics, because some of the decentralized measures are pretty much on the podcast. So there's more privilege, and we all see the next central level, and advocates contend that DeFi platforms operate on the principles of autonomy, allowing users to transact without traditional intermediaries. And the Blockchain Association, an advocacy group for cryptocurrencies based in the United States, has sent in a comment letter mostly opposing the tax laws that the Internal Revenue Services has been recommended. Today, we filed a comment in response to Treasury's proposed broker rule. The proposed regulations reflect fundamental misunderstandings about the nature of digital assets and decentralized technology more broadly. FT Koppel breaks down our comment. Blockchain Association, November 13th, 2023, and some of the over 124,000 letters submitted, including 2,000 in the last 2 days, argue that the recommended rules push the definition of a broker too far in regulation brought forth during the summer. The Blockchain Association asserted that numerous participants within the cryptocurrency sphere would face challenges in adhering to the stipulated guidelines if implemented. Specifically, the group argued that a substantial portion of those engaged in decentralized finance would encounter significant hurdles in achieving compliance, contending that they were essentially incapable of doing so. The group said that the Treasury had overreached itself with the proposed regulations, perhaps violating constitutional rights, especially those concerning freedom of speech and privacy, according to Marissa Coppell, Senior Counsel for the Blockchain Association. The proposal's overarching nature should be refined to focus exclusively on centralized entities. She emphasized that developers of DeFi protocols and non-custodial wallets face inherent challenges in adhering to the proposed rule. And Coppell also highlighted a crucial distinction, pointing out that DeFi software facilitates user connections but doesn't effectuate transactions akin to a traditional broker. Consequently, these developers lacked access to assist in the information necessary for the prescribed reporting. Coppell raised a poignant concern, stating that the proposal, if enforced, could force U.S.-based decentralized projects to either relocate internationally or cease operations altogether, as compliance would necessitate abandoning the very decentralized technology but defines their uniqueness. Kristen Smith, the CEO of the Blockchain Association, emphasized the distinct nature of the crypto ecosystem compared to traditional assets. She stressed the need for rules that are specifically encrypted to suit this unique environment, ensuring they do not unintentionally encompass participants without a clear path to compliance. Treasury and IRS released proposed regulations on the sale and exchange of digital assets by brokers. DeFi Education Fund defied August 25th, 2023. For her part, DeFi Education Fund CEO Miller Whitehouse Levine said the IRS's current proposal is perplexing, contradictory, and misguided, as it seeks to enforce regulatory frameworks based on the presence of intermediaries in situations where they are absent. The hearing scheduled for Monday will be conducted solely in audio format and aims to convene notable proponents of cryptocurrency to present their perspectives on the proposed framework, outlining attitude, the reporting of transactions by crypto brokers and investors to the IRS.